Hi, good day. Welcome to ECOLAB 2024 Financial Story and Century-Long Growth Journey. In the next 10 to 15 minutes, I'll show you how a company that started with a single carpet cleaner in 1923 has become a $16 billion leader in water, hygiene, energy solutions, and AI, and how its 2024 results set new records for revenue, margins, and free cash flow. We'll weave two threads. First, the narrative arc of Ecolab's innovation culture. Second, a data-driven look at the latest 10K. Along the way, we'll use AI-powered summarization and visual tools, including a Sankey diagram to translate 40 dense income statement lines into a story anyone can follow. My name is Hisham Makaraya from Miss Infotech. This work is part of the AI-powered financial storytelling project from Finance and Business AI course at Houston City College taught by Professor Kartik Rajan. Let's dive in. Before we jump in, here's the roadmap so you know exactly where we're going. First, we'll set the stage with a century-long narrative, how a 1923 carpet cleaner startup evolved into the global leader in water and hygiene solutions. Second, we'll pinpoint where the dollars come from by breaking sales into four business segments and key regions. Third, we'll zoom out to a 5-year view: revenue, EPS, earnings per share, and margin trends that show the company's trajectory. Fourth, we'll dissect Ecolab's 2024 income statement, but in plain English, no 40-line tables. Fifth, we'll visualize that P&L as a Sankey diagram so everyone can literally see how each revenue dollar is allocated among costs, expenses, and profit. And sixth, we'll finish with Ecolab's AI roadmap, linking those historical strengths to the next wave of digital-driven growth. In the next 2 minutes, I'll let my AI assistant Alex run you through the innovations at EcoLab.
Hi, I am Ryan, an AI assistant from Mise en Place Tech. I will briefly guide you through Ecolab's history. Ecolab's story begins exactly a century ago in 1923, when Merritt J. Osborne set up a one-product shop in St. Paul, Minnesota, selling Absorbit, a carpet cleaner. Within a year, he pivoted to dishwashing chemistry with Soylax, the first color-changing detergent that told users when they had the mix right. That clever dose control formula foreshadowed a culture of practical innovation. In 1935, Osborne created a field service army called dishwashing consultants, who would pop in at any hour to fix equipment and train staff. That hands-on promise, service comes with chemistry, still differentiates Ecolab. During World War II, Ecolab shipped over 30 million microclean packets to the US Army, keeping mess kits sanitary and soldiers healthy. Post-war expansion followed, and by 1957 the company rang the Nussy bell and started selling into Europe. A signature breakthrough came in 1961. Clean-in-place technology let dairy plants sanitize miles of pipe at the push of a button, a direct ancestor of today's automated hygiene systems. Fast forward to 1986, the name changes to Ecolab, and the mission broadens to encompass clean water and safe food worldwide. Global scale accelerated in 2011 with the $5 billion Nalco acquisition, making Ecolab the leader in industrial water treatment. Over the last decade, the company has gone digital. The ECOLAB3D platform, launched in 2018, now ingests sensor data from factories and hospitals, using machine learning to preempt problems and save customers hundreds of billions of gallons of water. Just this year, Ecolab rolled out Rush Ready for restaurants and a new 3D Trezor solution for AI data center cooling. From a carpet spot remover in Minnesota to an AI-enabled guardian of water and hygiene in 170 countries, Ecolab's century of innovation sets the stage for the financial story we'll examine next.
Thank you, Alex. Before we dive into the numbers, let's ground ourselves in what Ecolab actually does and where those dollars come from. Let's talk about the mission. Protect. So Ecolab's mission is protecting what's vital, which is clean water, safe food, and healthy environments. That single line explains why the firm has credibility from hotels to vaccine factories. Now, in the 2024 revenue mix, the pie chart on the left shows four parts. First is the global industrial, that is half of the net sales. It covers water treatment and process efficiency for heavy industry. Margins strengthened in 2024 as energy customers upgraded cooling and boiler systems. The next one is institutional and specialty, which makes up 34% of the net sales. One third, that's one third of the sales. It touches is the high touch service arm for restaurants, hotels, and food plants. Post COVID reopenings plus smart pricing drove an 8% sales jump and a 40% profit surge in 2024. The next is healthcare and life sciences, which makes up 9% of the net sales. It is strategically important. Pandemic demand has normalized, yet pharma clean room projects keep the pipeline solid. And last but not the least is the pest elimination section, which makes up 7% of the net profit. It protects food brands and hospitality sites from infestations and continue to grow mid-single digits or organically. Finally, note the geographical spread. More than half of the revenue still comes from the United States, which is 51%. But Ecolab sells into 170 plus countries, with Europe and Asia Pacific providing about a third combined. That diversification cushions regional downturns and lets innovation scale quickly across borders. Taken together, mission clarity, a balanced segment mix, and global reach set the stage for the financial momentum we'll see on the next slides. This chart distills 5 years of top and bottom line movement. The blue bars show net sales climbing from 11 billion in 2020 to 15 billion in 2024, a 33% expansion or about 7% compound annual growth. The strongest acceleration came from 2022 and 2023, when reopening restaurants and hotels added billions in institutional sales and the Nalco water business captured new industrial projects. The growth moderated to 3% in 2024, yet still set a new record high. The orange line is even more striking. The diluted EPS, that's earnings per share, more than doubled, rising from $3.33 per share to $7.37 in 2024, which equates to roughly 22% of CAGR. Notice the dip in 2022. Raw material inflation squeezed margins, but the curve steepens in 2023 and 2024 as pricing action mix shift and lower interest expense kicked in. Key takeaway: revenue growth was steady, but profitability grew disproportionately faster, telling us Ecolab converted each incremental sales dollar into a larger slice of earnings. That operating leverage will be a recurring theme in the next slides. Let's unpack 2024 performance through Ecolab's four business engines. First, the global industrial sector. Roughly half of total sales at $7.9 billion. Revenue increased by modest 3%, but pricing and efficiency drove margins to 16% year-on-year growth, resulting to an operating income of $1.3 billion. Water treatment wins in manufacturing and energy efficiency underpinned that lift. Next, institutional and specialty. With hotels and restaurants fully open and Ecolab implementing value-based pricing, sales increased 8% year on year to $5.4 billion. The real headline is the 40% surge. Wow, 40% surge in operating profit. That is $1.8 billion, pushing margin to nearly 22%. That leverage makes this the clear star segment of the year. Health, Healthcare and life sciences stepped down after pandemic highs. Revenue fell 11% to $1.4 billion and profit slid 8%. Even so, at a 10% margin, the unit remains solidly cash positive while demand normalizes. Finally, pest elimination. Pest elimination quietly delivered its first billion-dollar year, up 9%. The operating margin remained healthy at 19%, reflecting sticky service contracts in food and beverage and hospitality sectors. The key takeaways: Ecolab's portfolio is balanced. Industrial gives scale, institutional provide high margin rebound, healthcare is resetting to a new baseline, and pest offers steady recession resistant growth. This slide tells the margin story in one glance. Focus first on the yellow operating margin, this line. You see it sag in 2022 to just over 11%. Raw material costs skyrocketed and freight was a mess. But look at 2024. Operating margin leaps to 17.8%, the highest in company history. The orange net margin line follows the same arc, bottoming at 7.7% and then climbing to 13.4% last year. That improvement means every incremental dollar of sales is dropping almost twice as much as the bottom line versus 2 years ago. What powered the rebound? This rebound? Three levers. First, pricing. Ecolab raised prices early and often, and customers accepted because clean water and hygiene are non-negotiable. Second, mix. Institutional and specialty. The high-margin service arm roared back as restaurants and hotels reopened, widening the average margin. And third, cost discipline. SG&A rose less than 3% while revenue grew and the company trimmed interest expense through debt paydown. The key takeaway? Those widening yellow and orange band confirm management's narrative that 2024 was a record profit year, and they set a higher base for 2025. This single diagram converts 40 plus lines of the 10K into one intuitive river of cash. We're going to start on the left side with the green bars. $15 billion in revenue splits into a wider product stream and a narrower service stream. Remember, services may only be 21% of sales, but they keep customers sticky and margins attractive. Slide to the right, we hit the gray block, $18.9 billion of cost of sales. That means 56 cents for every dollar is spent from the moment we ship a drum of chemicals or show up on site to service a dishwasher. The remaining 44% form the blue gross profit region. Our margin fuel. Next comes the red band. This is our operating expenses or SGAs plus a small special gain. Note its width relative to gross profit. Because overhead grew slower than revenue, the blue ribbon survives. Operating profit is the widest at it has ever been at $2.8 billion. Below the operating line, the red, red slivers get thinner still. Net interest and other costs together shave off less than 2% of revenue, proof that Ecolab's debt paydown strategy is working. Taxes take another slice, leaving the final blue strand $2.1 billion in net income, about $1 of profit for every $8 sold. Visually, you can see three strategic wins. 1. Gross margin recovery after inflation. 2. Operating leverage as SG&A stays flat. And tighter financing costs. That trio is why the right-hand call-outs show record highs in gross, operating, and net margins. In other words, the Sankey confirms that 2024 wasn't just a revenue record, it was a profitable milestone. Now we're going to talk about the balance sheet strength that fuels the record free cash flow. Starting with the bars on the left, the tall gold columns track operating cash flow. Ecolab broke the 2 billion ceiling in 2023 and lifted the figure roughly 2.8 billion in 2024. Layered in orange, the free cash flow bars reach $1.8 billion, the highest in company history, even after nearly $1 billion of capital spending on new plants and digital tools. The amber line that zigzags across the bars represents total debt, which has fallen from $8.8 billion peak in 2021 to about $7.5 billion today. On a leverage basis, that translates to just 1.7 times EBITDA, comfortably inside management's target and well below most industrial peers. Turning to the right-hand chart, return on equity climbs from about mid-teens on to 26% last year, the strongest result since Nalco acquisition a decade ago, showing that every shareholder dollar is earning more than ever. Ecolab also extended its 33-year streak of dividend increases, raising the payout by 14% while using only about one-third of free cash flow. In short, record cash generation, lower debt, higher returns, and ample capacity to keep rewarding shareholders while funding the next wave of AI-driven growth. All the margin and cash flow gains we've discussed plug into a single digital backbone called ECOLAB3D. On this deck, we'll see a short video clip from Ecolab.
Your cooling water system is critical to your operation. Under stress, your system becomes prone to corrosion, scale, and biofilm. Left unchecked, these forces can damage valuable plant assets, increase downtime, and decrease production, all affecting your bottom line. But what if you had reliable insights that could provide early indication of potential system issues? Introducing 3D TRASAR technology for cooling water Premium Plus from Nalco Water. Premium Plus takes Nalco Water's industry-leading cooling water technology to the next level with first-of-its-kind sensing technology to help identify the type of fouling in your cooling system, eliminating guesswork to enable faster, more precise treatment and better outcomes. Here's how it works. Water from your cooling system flows over the patented sensor. Where mineral fouling is present, scale will begin to form on the sensor's hotter areas. If the contamination is microbial, fouling occurs on the sensor's lower temperature areas. Data from the sensors is then analyzed in real time and displayed as the Nalco Water Deposit Index in the ECOLAB3D digital platform. Insights into the specific deposits in your cooling water drive targeted, more effective, connective actions to help prevent operational problems and minimize your operating costs. Premium Plus technology for cooling water from Nalco Water. Next level water technologies, next level water performance from Nalco Water.
Where Ecolab goes next. In this deck, we're going to talk about the 3 pillars and 4 milestones. First, let's talk about the tailwind, which is the yellow pillar. By 2028, one-third of the world's GDP will sit in water-stressed regions, AI data center cooling spend will rise 20% a year, and food safety rules will tighten. All three trends boost demand for Ecolab's water, hygiene, and compliance know-how. Now we're going to talk about the red pillar, which is the strategy. Is scale the digital platform. Ecolab 3D subscription should double to $1 billion plus by 2028, powered by smart water navigator rollouts to 10,000 sites and a push towards 90% biodegradable chemistries. Last pillar would be the finance section, which is the blue pillar. Target of 18 to 19 billion in sales, more than 20% of operating margin, mid 20% of ROE, and leverage of approximately 1.5 EBITDA by 2028. Milestones making the plan tangibles are by 2025, China Water Reuse Joint Venture launches the Asia platform. So by 2025, they're going to launch the joint venture with China. By 2026, ECOLAB 3D version 2 edge sensors arrive on the market. By 2027, all Tier 1 plants achieve net positive water status. And by 2028, digital revenue surpasses 10% of total sales. If all of these milestones are met, Ecolab's profile will shift from selling drums of chemistry to monetizing gallons of water saved and the data it provides. So why Ecolab matters now? Let me leave you with 3 points. First, resilience. From kitchens to vaccine plants, Ecolab embedded in essential operations. That mission translated into a 43% gross margin and record EPS last year. Second, growth driven by data. Digital services are already $500 million business growing double digits, and management's target is to top $1 billion by 2028. Third, financial firepower. Ecolab's cash flow hit $1.8 billion. Leverage is low, and the dividend has risen for 33 straight years, giving Ecolab optionality to fund research and development, buy tech bolt-ons, and still reward shareholders. Add those three together, and you have a company transforming century-old chemistry expertise into an AI platform with the balance sheet to pull it off. Thank you very much, and have a good day.